How corporate actions affect investment banking portfolios. Welcome to Finance Fusion, your clarity code for complex finance fundamentals. Today we'll decode how corporate actions affect investment banking portfolios. Corporate actions wield a profound impact on the intricate tapestry of investment banking portfolios, injecting a dynamic element that demands strategic foresight and adaptability. From mergers, acquisitions, to stock splits, to dividends, these actions reshape the risk-return profile of investments. This introduction sets the stage to explore how investment bankers navigate the ever-shifting landscape of corporate decisions. It delves into the challenges and opportunities posed by corporate actions. Also, it emphasizes one of the most crucial roles into strategic analysis, proactive portfolio management. In this dynamic environment of investment banking, prowess becomes indispensable in optimizing portfolios and capitalizing on evolving market scenarios. Number 1. Dividends. Dividend refers to a reward, cash, and otherwise that a company gives it to the shareholders. Dividend can be issued in various forms such as cash, stocks, or any other form. Dividends are a good way to give an investment portfolio an additional stability, since the periodical cash payments are likely to continue in long term. There are 7 types of dividend: cash, stock, property, scrip, special, bond, and liquidity. The company's board of directors decide to pay dividend and its types. It depends on the company's financial performance, cash flow, investment opportunities, and other considerations. A company's dividend is decided by the board of directors and it requires the shareholders' approval. However, it's not obligatory for a company to pay a dividend. Dividend is usually a part of the profit that company shares with its shareholders. In US, some of the companies like Sun Microsystems, Cisco, and Oracle do not pay dividends and reinvest their total profit in the business itself. Number 2. Mergers and acquisitions. Mergers and acquisition can in fact cause seismic upheavals that can completely change the markets and the sectors. Investment bank plays a very pivotal role in enabling mergers and acquisition transactions, receiving large compensation for their advising services. They are vital to this revolutionary process. The effects of investment banking portfolios are severe. Profitable agreements can generate large profits, but unsuccessful ones could incur losses. Beyond specific portfolios, the overall M&A scene has the ability to influence investor mood and spark an increase in investment banking activity. Recently, there has been merger and acquisition of the Future Generale India in July 2023 declared their partnership with JM Financial Services to expand its services and presence across the market. In 2022, Gautam Adani acquired 27% stake in NDTV for 600 crores, marking his entry into the media sector. By 2023, Adani Group increased its stake by purchasing 1.76 crores shares from NDTV co-founder at 602 crores, securing a majority of stake in NDTV. Number 3. IPOs and secondary offerings. Initial public offerings, IPOs, and secondary offerings undoubtedly represent significant turning points in the business history. Investment banks are essential because they oversee and underwrite the issue of new shares. Public offerings offer attractive prospects for investment banks who receive a portion of their capital raised in addition to the underwriting fees. On the other hand, secondary offers a presence of risk because an excess of shares may diminish the current shareholders' value and affect the portfolios. Investment banks plays a multi-dimensional role in defining corporate finance and protecting the delicate equilibrium of market dynamics by navigating the complexity of these offerings while striking a fine balance between capital infusion and shareholder interest. Number 4. Stock split and reverse split. In fact, firms use stock split and reverse split as tactical tools to adjust their price of their shares. A stock split increases the number of outstanding shares and lowers the price of the stock to make it more accessible to the average investor. A reverse split, on the other hand, reduces the shares and raises the price of the stock. In reaction to these changes, investment banks need to carefully recalibrate the portfolios, taking positive effects on valuation and liquidity into the account. So when analyzing these corporate actions in detail, it becomes clear how flexible investment banks must be in order to manage the complexity of the changing structures and maximize their portfolio's performance. Also, while keeping up with the changing dynamics in these financial markets, examples like Remedium Lifecare Limited will undergo stock split on February 23, 2024, with shareholders receiving 5 shares for 1 share held as of 8 Jan. Mark Advertising, a marketing services, rebranding as Mark Advertising, will execute a 10:1 stock split in the end of Feb, resulting in shareholders receiving 10 shares for every 1 share held as of 28 December 2023. Number 5. Spin-offs. Spin-offs are a process which, by a subsidiary of a larger organization, becomes an independent business. Spin-offs can boost the deal flow, generating advisory fees for services like financial analysis, valuation. Investment banks may secure underwriting opportunities for debt or equity offerings associated with spin-offs, increasing their revenue streams. Strategic advisory services for spin-off enhance client relationship and trust, potentially leading to future businesses. Research coverage initiation on spin-off entitles can attract investors' interest and contribute to trading. Shipping company Castor Maritime completed its spin-off of Toro Corp earlier last year. Vedanta has spin-off its metal, power, aluminium and oil and gas businesses with an official announcement recently. To sum up, corporate behavior has a significant influence on investment banking portfolios, influencing the dynamics of risk and return. Agile portfolio management is required when investment landscapes are redefined through mergers, acquisition, and other strategic changes. Equipped with strategic acumen, investment bankers effectively navigate these shifts, capitalizing on opportunities and minimizing the risk to maximize the portfolio's performance. The importance of proactive adaptation and ongoing analysis in reacting to the corporate action is emphasized in the conclusion. Our journey into financial clarity doesn't end here. Explore our archive of videos for wealth of knowledge just waiting for you. If you found value in today's video, give it a thumbs up. Subscribe for our future insights and share it with your friends. Remember, the more we learn together, the stronger we become. Thanks for being a part of Finance Fusion, your compass to financial enlightenment.